NIO has been among the most talked about EV makers in recent years. Following a poor share price performance, the car manufacturer's investment case has changed from a high-flying growth story to a high-risk investment. So why has NIO been struggling? How will it grow in 2025? And most importantly, will it make a profit by the end of the year? Beyond the current market sentiment, NIO seems poised for a remarkable comeback. When you factor in the company's surging vehicle deliveries, alongside its surprisingly modest valuation, the stock is well positioned for significant upside in the medium to long term. Based on NIO's potential, I'm bullish on this stock in advance of a potential re-rating as we wait for the Q1 earnings report. Moreover, Wall Street analysts are offering conflicting opinions on NIO's future prospects. While Goldman Sachs is bearish, Morgan Stanley is bullish, and JP Morgan is neutral. Altogether, analysts forecast more than a 30% upside for this premium EV stock. Meanwhile, as analysts try to rate NIO, long-term investors may have a huge opportunity to pick up NIO at a heavily discounted price. So why has NIO been struggling so much? Over the past year, the company has faced a mix of macroeconomic headwinds and industry-specific challenges that has weakened investor sentiment. The most significant factor is the ongoing ruthless price war in China's EV market, led by Tesla and BYD, which has compelled car makers to cut prices. As a premium brand, NIO's margins have been hit hard. Tesla's aggressive discounts have made it tough for NIO to hold on to its pricing advantage. NIO therefore responded by reducing promotional incentives to shore up its bottom line, which led to a brief dip in sales a few months ago. China's broader economic struggles also played a role outside the EV market. Softer GDP growth, property market concerns, and weakening consumer confidence have created a challenging environment for large purchases, which include electric cars. Meanwhile, NIO's continued investments in R&D, production capacity, and battery swap infrastructure have increased its losses in recent quarters. However, we know that these initiatives are crucial for NIO's future growth, but have led to heavy quarterly losses, prompting Wall Street to question the company's financial health. And this is a reasonable assessment, as future funding would be costly today, both debt-wise in terms of interest rates and equity-wise in terms of a low stock price. Despite these obstacles, NIO's sales numbers have been increasing to a higher level. In Q3, it delivered a record 61,000 vehicles, solidifying its status as the top premium EV brand in China for cars priced over 300,000 yuan. Then, NIO followed up with an even better Q4 on deliveries, shipping over 72,000 vehicles, which is a year-over-year increase of 45%. Q1 2025 data show NIO sales are not slowing down. For January, NIO delivered 13,863 cars. In February, deliveries were also over 13,000. March increased over 15,000 cars, and most recently, April increased to a total of 23,900 vehicles. If we compare these monthly numbers to the same time last year, January's numbers were an increase of 37%, February 62%, March 26%, and April a huge 53%. So, it's clear that these sales numbers show a continued demand for NIO's EV lineup in the hyper-competitive Chinese market. And NIO is competing with some of the world's most established EV makers and has underperformed on a peer comparison basis. However, any shrewd investors should always be looking for stocks that are undervalued rather than trading all-time highs. So, the recent sales numbers are encouraging, and 2025 will see NIO add 2 new models in their EV lineup, the ET9 and Firefly, which launched during March and April respectively. The NIO ET9 is a battery-powered, full-size sedan and is the first NIO vehicle to use the new Shenji autonomous driving chip, making it NIO's flagship vehicle. According to NIO, each of the ET9's 2 Shenji chips has a higher processing ability than the previous top Atom system, which consists of 4 NVIDIA chips. The ET9 is powered by a 100 kWh battery and can be swapped at a 4th generation NIO swap station in just 144 seconds. The battery boasts a CLTC range of 650 kilometers. Deutsche Bank analysts expect monthly sales of the NIO ET9 to be around 1,500 units, with CEO William Li saying, "The ET9 won't be a strong performer in terms of total sales numbers, but if it sells 1,000 units a month, we'll be quite happy." Along with the ET9, NIO also launched the Firefly brand during NIO Day 2024, designed to challenge the BMW Mini and Mercedes-Benz Smart Car, with the eye on the global market. Looking at NIO's news release for April this year, they confirmed the Firefly official launch by stating, "Our small, smart, high-end electric car, Firefly, was officially launched on April 19th, 2025. Built upon NIO's expertise in R&D, design capabilities, safety standards, and intelligent technologies, Firefly embodies the brand DNA of being vivid, thoughtful, and solid. It offers a vivid driving experience where users can embrace the freedom to glow." Following the product launch, Firefly started deliveries in China in late April 2025, with plans to gradually reach global markets in the near future. In the same news release, NIO confirmed April deliveries of 23,900, consisting of over 19,000 for the NIO brand and 4,400 for Onvo, and initial deliveries of the company's brand Firefly. So, no official numbers for Firefly in April, but we should expect to see the total Firefly deliveries for the month of May in the next report due on June the 1st. Another vehicle that can help NIO grow in 2025 is the Onvo L60. The Onvo L60 went on sale in September 2024 in China, following its debut in May. The design of the Onvo L60 was led by former Bentley designer Paul Perez, and the L60 does look similar to the Tesla Model Y, which is to be expected, with both designs optimized for a low drag coefficient. The L60's drag coefficient of 0.229 is slightly superior to the Model Y's of 0.236. The cabin of the L60 adopts a sleek and minimalist approach, similar to Tesla, with a single 3K infotainment screen mounted horizontally in the front passenger compartment. The L60 is compatible with NIO's 4th gen battery swap stations, as well as 3rd gen stations with modifications. At launch, approximately 1,000 stations will support the L60, with plans for 2,500 stations by the end of 2025. As a result, buyers can opt for Battery as a Service, or BaaS, which offers a significantly lower purchase price with a monthly rental fee, depending on the battery pack size. As we know, one of the unique things with NIO is its battery swap stations, and this feature of the NIO system could produce steady long-term revenue over time. As of April 2025, NIO currently has over 3,289 battery swap stations in China, with Shanghai having the most at 183. The company also has 58 stations in Europe, including 20 in Norway and 19 in Germany. And in recent news, CNEV Post reported that NIO have completed initial coverage of all counties in the Guangdong province in southern China, marking another milestone in its Power Up Counties program. With 2 new battery swap stations going into operation in Guangdong, NIO Power has now achieved full coverage of all counties in that province. As of now, NIO has 428 swap stations in Guangdong, according to the company. And battery swap stations are big business for NIO. NIO management claims the swap station fee is comparable to the cost of supercharging. And what makes NIO's battery subscription service so attractive is customer peace of mind. Customers who choose to lease the battery pay a monthly fee, similar to fuel costs on a non-EV. In return, they get to use the vehicle worry-free, without any concern for battery maintenance or battery replacement. I think this is a great long-term option. NIO is expected to post its Q1 results on June the 3rd. With robust delivery growth, Q1 will likely mark a key moment for NIO. In Q4, the company delivered over 72,000 vehicles, a new quarterly record, representing an increase of over 45% year over year. For the full year of 2024, the company delivered over 221,000 vehicles, which reflects an increase of nearly 39% year over year. In the 2024 earnings report, CEO William Li stated, In 2024, we achieved a new record of 221,970 vehicles. Throughout the year, the NIO brand maintained its position as the leader in China's battery electric vehicle market for vehicles priced over 300,000 yuan, capturing a 40% market share. The market share of the Envoy L60 has been steadily increasing since its launch, securing a top 3 position in China's BEV SEV market, priced between 200,000 and 300,000 yuan. There was also interesting comment from the NIO CFO, Stanley UQ. He said, in the fourth quarter of 2024, despite the Envoy L60 being in its early production phase, our vehicle gross margin reached over 13%. And looking ahead to 2025, we will sharpen our focus on enhancing profitability by driving cost reductions through technological advancements, optimizing operational efficiency, and accelerating scalable growth. Cost reductions. We all know this will be a key factor if NIO is to deliver profits by the end of 2025. They must reduce costs and improve the bottom line. So, what could this look like over the next 4 quarters? Let's take a look. If we look at the 2024 data, we can see net loss has been increasing. Q4 shows a loss of 974 million, and this number increased from 764 million in Q3. So, for NIO to take steps towards profitability, it would need to show a significant reduction in losses in its Q1 report. For example, hypothetically, could NIO post a net loss of 600 million in Q1, then 300 million in Q2, 150 million in Q3, and by Q4 post a profit of 100 million? Let me know what you think. Are these numbers realistic? Let me know in the comments. If NIO can deliver progress like this, it's possible the share price will start to consolidate between $4 and $5 before potentially breaking upwards closer towards the Q4 earnings report date. Often, investor sentiment can be found on the stock chart, especially around reporting season. And looking at NIO's chart for the last 6 weeks, price did rise significantly from the $3 low created in the first week of April, peaking at $4.44 in the last week of April. However, over the last 3 weeks, price has fallen, and it looks now as if it might test $3.60. Having said this, the upcoming earnings report may provide more context of price direction for 2025. So don't be surprised to see a spike in either direction. The upside potential for NIO is high. But to confirm NIO is making a sustainable move upwards, I think we need to see price first take out $6 and then the recent peak of $7.71. Now, if the Q1 earnings are positive, this may be the catalyst to start this move to the upside. Analysts on Wall Street remain concerned about NIO's investment profile, with the stock carrying an overall hold rating based on 2 buy, 8 hold and 1 sell rating over the past 3 months. However, NIO's average price target of $5.05 per share does indicate almost a 32% upside over the next 12 months. NIO's growth story remains compelling, despite its share price struggling over the last 12 months. The Chinese EV market is hyper-competitive, and with all firms struggling for ongoing market share. However, when you look at NIO's climbing delivery numbers, 2025 could be a real turning point. China's economy is also poised for stabilization, and the global EV market is heating up. So NIO is well positioned to tap into opportunities, both domestically and abroad. The market may have discounted its shares due to past and present uncertainties. Still, as clarity emerges, those willing to look beyond its near-term losses, among other worries, may find themselves well rewarded. So last week, NIO stock was down by 7%. It's now down around 12% for the month and down 22% for the last 3 months. It looks as if now NIO is heading down to test that level of $3 after breaking the 360 support level. So in this video, I want to look at the price action for last week and try and ascertain where NIO is heading next, particularly with the upcoming Q1 earnings report. Let's take a look. So if we zoom in on NIO's weekly chart, we can see last week that price action did break through this key level of $3.60. So it does look as if now NIO is heading downwards and there is more downside. Potentially price may move down to test the $3 level once again. It might fall short and get some support around 330 and then move back up, find resistance here before coming back down again. That's one possibility. Right now, the likelihood is, after this last move, is that NIO is going to come down to around here, retest this level and come down to $3. So what we might see over the next 6 weeks is price action like this. This is my bearish scenario for NIO based on the current price action. It's gone through that 360 key level, and therefore the probability is that price is heading down to test $3 once again. And this short-term price action would be in keeping with NIO's longer-term trend, which as we know is bearish. We can see, zooming out, looking at the weekly chart of NIO, since that all-time high of around $66 back in January 2021, NIO has been in a long-term downtrend. There's been some counter trends coming back up to test the trend line, but each time it's come down and pushed back up, it has been rejected, confirming that the sellers are in control long term. Now zooming back in, we can see that since that low of $3, NIO did have a strong 4 weeks, pushing up to that peak of 445. Then we had a 1 bar counter trend, testing what the sellers have got before buyers came back in and tried once again. However, price didn't get through 427 and didn't get through this level of 445. So NIO had a chance to push up and try to get towards $5, but the selling was just too strong. There wasn't enough commitment from the buyers to take that price up to that $5 level on the underside of the trend line. So now, since that peak, we can see sellers are back in control and the price is moving lower. Now, interestingly, if we look at the NIO daily chart for last week, bearing in mind it was a 4-day trading week last week, with Monday being closed on the exchange, we can see that on Tuesday the 27th, it was overall bearish, with price overall moving down. Then we did have a little bit of buying interest, but eventually price closed back down near the open. And then price did move higher on the Thursday, but was met with selling pressure once again. And it wasn't until Friday the 30th where price collapsed and dropped through the key level support of 360. So big selling pressure on Friday that took the price down. Now, with the Q1 earnings report due in a few days, we might see a catalyst in that report to attract new investors back into the fold to buy up the stock. I think most people agree that the earnings report will show heavy losses once again, hopefully less than 900 million compared to the last quarter, but heavy losses nonetheless. However, with the sales growing and with the possibility that NIO management will offer guidance for the rest of the year, and if that guidance is positive in terms of the path to profitability and the steps they're going to take to reach profitability by Q4, that might attract investors back into the fold. Some investors might think that, okay, the price is low now, it's great value compared to what it was. If profitability can come in Q4, there's a high chance that the price might reverse, and obviously getting in now is going to give you great value. But overall, there's still risk here. We must remember that NIO is in a long-term downtrend, and even the shorter to medium-term trends are always going to conform to that longer-term trend, which is down. And we've seen that over the last few weeks. We've had that counter trend rising up from $3, creating that peak at 445, but once again the sellers took over and they pushed that price back down, confirming the big picture of a downtrend. So if the Q1 earnings are positive and the guidance within that report is positive, and NIO spells out exactly how they're going to achieve profitability by Q4, we could have a bullish scenario on our hands. So we might see price fall again next week and perhaps find some support around 330, perhaps in between these two levels here. There's not a level like a markup here where it's clear that price has changed direction in the past. But next week's price bar is obviously going to include the week of when NIO reports its earnings for Q1 2025. So we'll either see another red bar as price moves down on negative sentiment, or it could be positive sentiment in that the guidance is positive, sales are up, and losses are shrinking. And I think that will attract investors back in, and potentially we could see a green bar next week. We might see price reversing. Now, if it does reverse next week and buyers come back in, seeing value at this price level with the updated guidance, what could happen? So potentially price could reverse next week on positive news. So it might come down to potentially here and then reverse back up and come into this zone around about perhaps $4, corresponding to this support level here and here. So it might move to $4, then come back to test the selling interest and perhaps find support at 360 before pushing off once again to test 445 and again towards this sort of $5 zone around here. That's possible. We could see more interest in NIO stock following the earnings report, and we could see an increase in price short term. But let's not forget that strong long-term trend is still down. So it still might surge short term, but meet resistance in and around this long-term downtrend. And for price to break above the long-term trend and really take off, we need to see a catalyst. We need to see some really positive news come out regarding NIO. It could be a significant reduction in losses. Perhaps they cut the losses in half. Perhaps sales double. Perhaps the ET9 and Firefly sales really look strong for the next 2 quarters. Or perhaps NIO will announce a new partnership deal which will shore up finances for the next 2 to 3 years. There's lots of things that could happen that could be the catalyst for a breakout. But overall, right now, for NIO, the risk is still towards the downside. It looks as if the price is heading for $3. However, things can change quickly. With the earnings report due next week, positive news could send the stock soaring, or it could send it moving down. I think if you're an investor, considering NIO right now, it's probably best to wait till after the earnings report to confirm direction. That might give you a safer entry and provide more information on what the stock might do over the next 12 months and if that path to profitability is realistic. Thanks for watching.